Good day, students, and welcome to today's lesson. In today's lesson, we're going to be doing cost accounting manufacturing, but specifically the direct material, direct labor cost, right? In order to be able to calculate your prime cost. So by the end of this lesson, you must know how to define the terms direct labor cost and direct material cost, as well as the prime cost. You must also be able to calculate the total prime cost, and you must also be able to record transactions that affect the direct labor cost and the direct material cost. So moving straight to the definitions. Direct material cost. Direct material cost is also known as the direct raw materials, right? So don't be confused. So the direct material cost or direct labor cost are the components that are directly used in the manufacturing process, right? So let us say, for example, we are a manufacturing business. We are manufacturing tables, right? So the wood that we manufacture and change into making it a table, that is our raw material. That is our direct material, right? So these are the materials that can be traced directly to the production of a particular item. So as I said, for example, if we're making wooden chairs, the wood, the screws, and any other materials that are specifically used to make the chair would be considered the direct materials, right? The next one is direct labor costs. So direct labor costs refer to the costs of labor that can be directly traced and attributed to the production of a specific product or the performance of a particular service. It includes the wages, salaries, and benefits paid to the workers who are directly involved in the manufacturing process. So these workers are typically those who directly handle and work on the product or service being produced, right? So the same example, if we're manufacturing tables or wooden tables or wooden chairs, the workers that shape the wood into that chair, the workers that polish the wood, and the workers that paint the wood with the varnish polish, all those workers, those are their salaries and their wages and their benefits. They go under the direct labor cost. So those are the direct labor costs. Moving on to the prime cost. The prime cost is the total of direct labor and direct material cost, right? So your prime cost is the total of your direct labor and direct material cost. It represents the fundamental cost directly associated with the production of a product, right? So the prime cost is just adding up all your costs, the costs that you need in order to make that specific product. So what do you need? You need your raw material. You need your workers to actually make that product. So when you combine those two, they give you your prime cost, which is the cost that is incurred in order to make that specific product. Okay, moving on. Now that we have done the definitions of terms, you know what it is direct labor is, what is direct material, and what is our prime cost. Now let's go to the practical work. So in this case, they are showing you the account, the raw material account, and what goes under the raw material account or direct material account. We have our opening balance at the beginning, right, which is the balance we would have gotten from last year's, right, which is the closing balance for last year. It comes back as the opening balance at the beginning of the year. And we also include the purchases of raw material, whether it's on cash or it's on credit. We also add the carriage on purchases, the transportation, the import duties that are incurred when the raw material is being brought to our business. And then we must minus the returns of raw material, right? So if the raw material comes to our business and we see maybe it is damaged or it is in a way that we didn't order, we can return it back to where we ordered our suppliers. So we minus that, and then we also minus our balance at the end of the year, and that will give us the raw materials issued to the factory, right? It will give us the raw materials for that specific year. Moving on to the direct labor. The direct labor account, what goes into that account? So you add all your salaries and wages for your workers, the workers that are directly involved in the making of the product, not any worker, not factory workers, not cleaning workers, but the workers that are directly involved in the manufacturing of the product. You also include any UIF contributions for the workers to get your total direct labor cost. And now we're going to do a short example or activity so that I can demonstrate to you how to record transactions. So in this case, we are given information about Fatima manufacturers, right? We have our opening balance on the 1st of March 2009. They are also giving us the closing balance at the end of the year, which is 28 February 2010, right? We are also given additional information and adjustments. They also give us the summary of transactions for the year. There we have the purchases of raw material on credit, the carriage on purchases, we have production wages, and then UIF contribution, right? Now let us read the additional information and adjustments. So adjustment A, they say no entry was made for the transport of raw materials by POPs, right? Carries to the factory 3,750. Adjustment B says no entry was made for the following in respect of the production, and they say direct labor cost, right? So wages for the last week of February 2010, the entry was omitted, meaning that it was left out from the wages journal. So they're giving us our gross wage of 6,200. They're giving us our deduction of 62 Rand, and they're giving us our PAYE of 1,240. And they say the employer contributes 1% of the UIF, right? Moving on to the solution of the example of the activity. So we are going to start with the direct material or raw material cost first. So for the direct material, they gave us a opening balance at the beginning of the year of 160,000. So we're going to put that amount at the beginning. Then they gave us an amount of 1,023,475 of purchase of raw material on credit. So we're going to add that. So we're going to put a plus sign there of 1,023,475, right? Then they also gave us the carriage on purchases of the raw material, right, of 22,500. You're going to add it with the other amounts. And then we also had transportation wages, right? There by adjustment A, they said no entry was made for the transport of raw materials by POPs, and they gave us an amount of 3,750. We're going to add that amount because it is also a cost that was incurred when the raw material was being brought to our business. So we're going to add that amount, and then they give us the closing balance at the end of 259,125 rands, right? So we're going to minus that amount. Please take note that there are no returns of raw material. That is why we don't have them here. But if there were returns, we would minus them. So when we add our opening balance of 160,000 plus our raw material purchase of 1,023,475, we add our carriage on purchases of 22,500. We also add our transportation of 3,750. We minus our closing balance of 259,125. It will give us our raw material issued to the factory of 950,600. Moving on to the direct labor cost. So in the direct labor cost, they gave us an amount of purchasing wages of 723,800, right? So we're going to put that amount first. And then adjustment B says that there were entries that were omitted, meaning there were entries that were left out of the wages journal. That is adjustment B. So they gave us a gross wage of 6,200, meaning that 6,200 wage was left out. So we have to include it in our direct labor cost, right? So we're going to say 723,800 that we already put of production wage. We're going to add the 6,200, right? Which is going to give us a total of 730,000. And then they also gave us an amount of, they also said the employer contributes 1% of the UIF, meaning we are the employers, right? So we contribute 1% of the UIF. So we're going to take the total production wages, which is 730,000, multiplied by 1%, and it's going to give us a UIF of 7,300. So bear in mind, we are not only calculating UIF on the 6,200 only, because that is not the only amount of wages that we pay. So we pay a total wages of 730,000, meaning we must also pay UIF according to that amount. So when you add that amount, 730,000 plus 7,300, it will give you 737,300. And then don't forget our formula to calculate prime cost. It is total raw or direct material plus direct labor cost. It's our total direct or raw material cost plus our total direct labor cost. It gives us our prime cost. That's the formula. So if we add our totals, the first total of direct material cost is 950,600 plus 737,300. It will give us our total prime cost of 1,687,900. So now we have come to the end of our lesson. So to assess the learners, there is an informal assessment that I have designed for them to finish. It is out of 20 marks and they will complete it in order to assess them. They can also mark the success criteria to see if they have learned or if they have achieved the learning intentions or learning outcomes. So if you are a student and you can say that you can define the raw material, direct labor, and prime cost, and if you are able to calculate the total direct material, total direct labor, and also calculate the prime cost, and if you can record transactions that affect these accounts in order to calculate your prime cost, then you have achieved our learning intentions. Thank you for listening to this lesson.